Imagine that you're a professional buyer and a professional seller. Your job is to buy at the lowest price possible and then sell at the highest price. Well, if that is your job and you know that there is a counterparty who's also trying to buy at the lowest price and then sell at the highest price, there's going to be some type of meta, some type of game that develops, right? And so we as retail buyers, right, we have a small amount of money and we are basically going against the big buyers. These are the hedge funds, these are the professional buyers who know exactly when things are going to move and when to move them. And so our job as retail investors and retail traders is to try to catch the big waves. And in this video, I'm going to talk about how to identify when those waves are occurring and how to ride the waves correctly. But it really comes down to understanding big buyer psychology. So let's actually break down the different phases that big buyers go through, and then we'll talk about when we should actually jump in, exactly on which wave we should jump in, and when to get out. So let's talk about the phases on the next step. So what are the different phases that big buyers go through? And we can actually see this play out on the graph. And so the graph, price action, the volume associated with that price action tells us everything that we need to know as traders. And this is actually called volume price analysis. It's how I trade. I started out being a technical trader, right? And then mixing in a few other methodologies. And this is the only methodology that I've seen works across any time frame for any stock. It could be futures, stocks, whatever it is that you're trading, right? And the reason that is the case is that volume shows participation. And when you have a lot of participation, it's hard to hide, right? It's only when few people are participating that the stock price doesn't make sense. So participation, volume, price, and all that turns into some phases. So the first phase is accumulation. And what do I mean by accumulation? Well, I mean exactly how it sounds, right? For me to make money and profit on something that I want to sell, right, I need to build up inventory. I need to get as much of it as I can. If you imagine that stocks are just inventory, if you imagine that these hedge funds are just trying to get stuff at wholesale prices so that they can sell it later, it'll make a lot more sense. But I want to buy millions and millions of these things called stocks that I can sell later. And I want to make 100% on each one, right? So I'm going to go through some phase. I'm going to try to buy as much as I can in this accumulation phase. What I'm also going to do, because I have friends in the media, is I'm going to release news stories that help hit the price. Release news stories that make people feel bad about the future outcomes and ultimately result in either the market crashing, that sector crashing, or even just a crash in that one particular company's stock. This isn't a conspiracy, guys. If you go onto any major, media channel, it could be CNBC, Fox, CNN, go to their business section, right? And all of them are going to have financial news articles, right? That are going to be very, very opinionated, and they're all designed to leave an impression, and that impression is either going to make you feel fearful or it's going to implement a sense of greed, right? If you've ever wanted to get in on Tesla, part of that is because the price has been going up, all the positive news media, right? And then at the same time, we know that Tesla will dump, right? So there was an accumulation phase, then there was a distribution phase at the end when they dump. And so buyers, right, are always buying. We often think that buyers are buying on the run-up. That's not when the hedgies are buying. Hedgies are buying when it's going down, right? They're dumping the stock, they're buying at bargain prices, they're releasing hit pieces so that the stock price stays down. And you need to be able to identify the accumulation phase. In the accumulation phase, the price is not going to go up, right? The price is going to say it's either going to be going down or stagnant, right? Because they want to get stocks at the best price possible. Obviously, it's a competitive environment. There are multiple people doing this, and so that's why the price action isn't flat. But this phase does exist, and the better that you become at identifying it, the better you will become at waiting. So they've just accumulated a ton of stocks, and meanwhile, or really at the same time, the market or the news media has been releasing hit piece after hit piece to depress the stock. And it's really, really hard for us to change our market sentiment really, really quickly. So what that means is even though that they've just accumulated, the stock price isn't going to immediately change. There's going to be phase 2, which is the congestion period. That is where the stock just trades sideways. There's not a lot of movement. Volatility is really, really low, and it's really, really hard, especially if you're a technical trader, to identify an entry point because nothing makes sense. This is when we get the bar coding. This is when you get the fat bars.
That's called bars. You know nothing about that.
You know, 0 wicks. There's very low wicks on the daily chart, and you're trying to understand why the heck is this not moving, even though there's so much negative news, right? We should be at a bounce point. We should be at a roof. There should be a resistance level. There should be some move, and you're waiting for that breakout, and you're waiting for that breakout, and the breakout never happens. It's because we're in the congestion phase, guys. It's really, really hard to change people's opinions in a second, right? You have to wait for the news to change, for the sentiment to change, and ride that wave. Think about a wave, right? You can't just change the waves of the ocean, or maybe that's not the best analogy, but the point is, think about steering a ship. That's what I was thinking about. You're steering a ship, a really, really big ship. You can't just change the direction of a big ship in a day, right? It takes a long time, and ultimately, its course will change. Its course is changing, right? But on a day-to-day or a second-by-second basis, you don't notice. You're just on the ship. It seems like you're going the same direction. It's not until you zoom out and wait a little bit that you see, like, oh yeah, this thing is actually turning around. And that leads us into the last phase, which is distribution. Let's talk about it. Distribution. Now it's time to sell everything that we got at bargain prices, right? So I'm the hedge fund. I'm the person trying to manipulate the market. I've done all this accumulation. I've let people's internal emotions settle down a bit, and now it is time to make as much money as possible. I'm setting up retail to come in and buy things at the highest price possible. I start releasing a ton of positive news. I'm talking about the future outlook of the company. I'm talking about how this company is diversifying. I'm talking about how the markets are hotter than ever, and how there's no way, even though that prices have been going up for a long time, there's no way we're going to enter a recession now. There's no way X, Y, or Z, right? We're putting out all the pieces to pump up the price so that I can sell, and we're all doing this together, right? It's not collusion. It's not a conspiracy, guys. It's really, really simple. Journalism is in it to make people feel a certain way, and it's really, really easy for all of these things to coalesce and happen at the same time. There's legitimate research as well, and you have to keep this in mind. There's legitimate research that is going to be used to make opinionated pieces. So people are going to find legitimate facts, and then they're going to form opinions about those facts, and then they're going to turn that into a news article that is very, very flavored and tailored to make you and me feel a certain way, so that we come in and buy Tesla at $700 instead of buying it at $350 when nobody believed in it, right? You have to keep this in mind, guys. The art of buying things low and selling high is psychological. Otherwise, everybody would do it. Otherwise, it'd be super, super simple. It doesn't make sense. Think about it logically. It does not make sense to buy something when every single piece of news about it is negative, right? But that's the best time to buy. The only time you want to buy something is when other people aren't buying, right? Be greedy when others are fearful. Be fearful when others are greedy, right? It's not simply being a contrarian. You don't want to be a contrarian investor. That's very, very different from being able to analyze something on its own and understand its potential future cash flows, as well as understand the distribution, accumulation, and congestion phases that big buyers go through. So, right, so in the distribution phase, this is also known, if we speaking in VPA terms, volume price analysis terms, as the selling climax, right? And so essentially what they're doing is they're selling, and the selling climax, even though we're talking about selling, the price is going like this. So they are selling into the increase in price. Think about it, right? Anytime you look at a price action on the chart, there's buyers and sellers. Well, you're the buyer coming in on the rise, and they're the seller coming out on the rise, right? So they are selling into the market peak, and then eventually what happens, right? We hit some weakness, right? We hit some resistance level. So they sell right up into this resistance level, teeters out a bit. They do something called a market test. So they'll test the price. We'll see, is there a little bit more? We'll see spikes. We'll see quick little volatility. These will show up as wicks on the chart, and then it dumps, right? It dumps off, right? The buyers disappear. There's not enough sellers. And then we go back into another accumulation phase where they start buying again at discount prices, right? So even though everything was going well and it seemed like the stock was going to run off into infinity, it never does, right? There's always this resistance level, which is why you need to understand support and resistance. I'll talk about it in another video, exactly how those form and what that really is. But again, guys, so many people overthink what the stock price is. When we're actually looking at a chart, we're looking at the story of people. When we look at volume bars, we're looking at the story of people. The price action is what the market agreed on in the open auction at that time. And then the volume is the number of people participating in that auction. That's all it is, right? So if you have a lot of people participating, right, and a really, really low spread between the buyers and the sellers, right, the prices that they're asking on, that means we have a highly liquid, highly agreed upon price, and it's probably legitimate. If you have a really big spread where the buyers are asking this, the sellers want this, and there's not that many of them, you don't want to play that game because the price is going to be all over the place. It's going to be super manipulated. They're going to say it's $100. They're going to say it's $300, right? And since there's only 2 of them, who knows what it is, right? But if there's a million people and they're saying it's $200, and they're saying it's $200.01, okay, I'll play that game because I'm either getting $200 or I'm getting $200.01. So those are the 3 phases. When do we want to get in, right? We want to follow the waves, right? So let's actually talk about following the waves. It's going to be the shortest part of this video, but understanding the phases is going to make this obvious. But in order to talk about the phases, we're going to go down there. So as retail traders, retail's buyer and sellers, we have 2 options, right? We can either go with the wave, we can trade with the big boys, try to accumulate at bargain prices, ride the wave, and then sell off again during that meteoric rise, which is really what we want to do. The other option is to not do that, which is dumb, right? Why would you not do that? Why would you not want to sell into that huge spike, right? Why would you not want to buy when it's super low and then wait for that distribution phase, right? Obviously, you have to survive through the congestion phase. You have to survive through that intermediary period. But let's actually talk about time frames. This is a really, really good point to think about what I actually mean by this. Does that mean that I'm buying and then waiting months? No, I'm a day trader. I'm in and out of trades within a day. I'm talking about hours, right? So these different phases happen within a day. You're going to see these across every time frame. So you're going to see it on the 3-minute chart, you're going to see it on the 15-minute chart, 30-minute chart, the daily chart, right? And it happens in every single time frame. Shit. Woo. Back to action. So knowing that, we still have to identify, okay, what is the 5-minute accumulation, congestion, and distribution? What is the 30-minute accumulation, congestion, and distribution? Same thing on the daily, right? You can, if you're a swing trader, obviously you can go to the bigger time frames. I'm a day trader because I want to trade for income, so I'm in and out in a day, but I'm always looking for that move right around 10 to 10:30. I'm looking for that reversal. I'm looking for the distribution, trying to identify which way we're going to accumulate, and then if we are in a congestion period, identify, okay, what is the next strong support or resistance level so that I can basically understand when we're going to reverse or possibly even extend our trend if we had weakness in one way or the other, right? So there's still a level of technical analysis that comes into it, but when you understand where the volume is, right, and the direction, if we're flying up on low volume, don't trust that shit, guys. Don't trust it. It makes no sense. If we're selling off with no volume, don't trust it, right? Movement has to be supported by volume because that means that a lot of people are doing that, right? If the market is moving on its own without participation, as soon as participation comes in, guess what's going to happen? Something else. Something else is going to happen because that's the real market. The real players are coming to show up. So always go where the volume is. Understand and analyze by volume. Understand, use things like the volume profile in TradingView and all these other indicators. Combine that with technical analysis. Again, this is just another way to analyze the charts. You want to use as many different indicators and analysis techniques as possible to make a trade. It's not easy, so if you feel frustrated and you're just starting out, understand day trading and trading is literally, actually I don't have numbers on this, but it's one of the hardest things that you could try to do consistently. 99% of people fail, but the fact that 1% of people don't means that it is possible, right? People are figuring it out. The reason it's so hard and the reason people give up is because it's money, right? There's very few things where failure actually results in you losing money, right? Losing a job isn't the same as losing money. You just stop making money. Trading, when you fail, you actually lose money. You go backwards. And so it's psychologically really, really, really difficult for people to stay with it, but you have to stay with it. Paper trade, guys, don't go for shortcuts. I know I'm derailing from the video, but psychology is so important in this. People ask me literally every day that I'm alive, hey Forrest, how can I get into trading? Hey Forrest, what do I need to do? What do I need to read? Blah, 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 blah. And like consistency and controlling your mind, daily affirmations, whatever crazy thing it is that you need to do, it's not crazy, guys. That's what it takes to be successful. That's what it takes to stay in the game when you lose $2,000 on a Wednesday, right? If you want to make the $2,000 back, possibly make, you know, $4,000 the next day, you got to stay in. You got to keep your mind strong. Yeah, and really defend your mental space. So that's it for this one. As always, my name is Forrest. I invest in stuff you should too. Thank you for stopping by. I'm getting out of here.